Now, what we have done it in the previous video. In the previous video, we have revised the introduction. What is equity we have learned? What is a liability we have learned? Under the equity, what will come we have learned. And under the liabilities, it is nothing but an external liability where there is come. What is SAMPA? SAMPA is nothing but share application money pending allotment. We have studied. Next. Our today's discussion on in this video, we will discuss on shareholders fund. Yes, sir. Shareholders fund. Shareholders fund includes of three. Shareholders, three. Shareholders, three. SFS, shareholders fund, three. Okay. SRM, short form is SRM. Short form is SRM. What is SRM, sir? Is college, no. It is share capital, reserves and surplus, money received against share warrant. Share capital, reserves and surplus, and money received against share warrant. SRM, short form, SRM. Now, come to most important thing, share capital. First, sir, what is share capital, sir? Answer is, what is share capital? Share capital includes both ESC, PSC. ESC, PSC. ESC, PSC. Equity share capital, preference share capital, sir. I'm not going deep into equity share preference share capital right now. There is a very basics which I have already discussed in your basics itself in your foundation as well as in CMA Inter as well. Module 1. Now, sir, the next point, sir. Share capital you are saying. I know it is an equity share capital. It is a preference share capital. What and all will be included, sir? Shares issued against amount to promoters. Basically, whatever they have written in MOA, that person name, that share has been issued to promoter. That is also included. PP, share issued against private placement, will be included. Share issued for subscription and subscribed capital will be included. Shares issued for consideration other than cash should also be included. On this, you may expect an adjustment on this. You may expect an adjustment on this point. Okay. Next, the persons, that is nothing but individuals and companies to whom shares are allotted are known as shareholder. Who is a shareholder? To whom the shares are allotted, that person is known as a shareholder. That person can be an individual, that person can be a company, that person can be a partnership, it can be an association of person or anything. Basically, it will be individuals and companies. Are you able to understand this? Sir, fine, sir. Super, sir. What is Schedule 3 of Companies Act 2013 prescribes? What it says? That the balance sheet to disclose, sir. What is to be disclosed? Disclose means to say. What and all they need to say? They need to show. First thing, sir. Authorized capital. Issued capital. Subscribed capital. Called up capital. Paid up capital. Order should not be changed. Strict condition, order should not be changed. Authorized capital, issued capital, subscribed capital, called up capital, paid up capital. AISCP, 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 AISCP. Authorized capital, issued capital, subscribed capital, called up capital, paid up capital. Authorized capital, issued capital, subscribed capital, called up capital, paid up capital. In depth, line by line, adjustment by adjustment, we are going to study. Next, what are the details required, given, or to be given in notes to accounts on the share capital? That is, always note 1 will go to share capital. Always note 1 will go to share capital. So what are the details prescribed, sir? First, AISCP. Authorized, issued, subscribed, called up, paid up. What is authorized capital, sir? Authorized capital is also called as nominal capital. It is also called as registered capital. There are three names. There are three names. You can interchange this. NAR, nominal capital, authorized capital, registered capital. Why it is registered capital, sir? At the time of registration, they itself will say, this is a maximum capital I can able to raise that my company can issue. That is known as registered capital. I am authorizing this. This is a maximum amount I can able to get it from the public or get it from the people. Okay, authorized capital, nominal capital, registered capital. Now, nominal capital, authorized capital, registered capital. Revise along with me so that it will be easier for you. Now, in depth, line by line, we will interpret. It is a maximum amount that I have invested huge time to prepare this material. Okay, personally, I have prepared it. Whatever needs to be there, it is there. Okay, keep listening. It is a maximum amount of capital that company can issue as a share capital. It is a maximum amount of capital that company can issue. Key point. Maximum amount. Key point. Maximum amount. Next, it is stated in MOA under capital clause, MCQ under capital clause, and divided into different class of share capital. Divided into different class of share capital. Divided into different class of share capital. What is the different types of share capital? Equity share capital, preference share capital, ESC, PSC. ESC and PSC. It is a maximum amount of which company can issue a share under each class of share capital, which you are already seen. The amount, the important point, amount of authorized capital is shown on shareholders capital. Most important point, what schedule 3 says, it is only for information only, Sudarshan. You should not add it to the liability. We are disclosing means all these items will never disclose, will go to the balance sheet. Few may stay in the notes to accounts like a disclosure statement. Few may be taken to the balance sheet. Like that, authorized capital will never ever taken to the balance sheet. It will only stays. It will keep their halt in notes to accounts. What is the definition of authorized capital, sir? Authorized definitions of authorized capital should be studied in section 2 class 8 of Companies Act 2013. No relevance of remembering a section number as well as for in accounting. If you remember, very fine. Definition of authorized capital as per section 2 class 8 of the Companies Act 2013. What it says? NAR. What is NAR? Nominal capital, authorized capital, registered capital. Nominal capital, authorized capital, registered capital. Nominal capital, authorized capital, registered capital. Means such capital is authorized by memorandum, MOA of a company to be the maximum amount of the share capital of the company. Fine, sir. For example, sir, I am authorizing, I want 10 lakh capital. I decided currently I need currently 10 lakh. But may in future I may need also 90 lakh. So what I will do, on 1 crore, I will write it in my CL. What is mean by CL? Or CC? Capital clause. Under capital clause, I will write in my MOA under capital clause, I will write this is an authorized capital. Maximum 1 lakh, 1 crore I can raise. Means assume per share is equal to rupees 10. If face value is rupees 10, it can be 1 rupee also. It can be 5 rupee also. It can be 2 rupee also. It can be 10 rupee also. It can be 100 rupee also. It can be 200 rupee also. So this 1 crore divided by rupees 10 will give you how much share? will give me 10 lakh shares. That can be of equity shares, that can be of the preference shares. Are you able to understood this authorized capital, sir? I will move on to issued capital. Listen very carefully. What is issued capital, sir? Issued capital is a part of authorized capital. From authorized capital only I can issue. So it is a part of authorized capital. From authorized capital only I can issue a share. So it is an issued capital. Whatever the capital I'm issuing, that particular capital is known as issued capital. Which company has issued to promoters as a subscribers to the memorandum by the private placement and for a subscription up to the date of the balance sheet, shares issued under each class of share capital, equity or preference, giving the number of shares issued. That's a key point here. Giving the number of shares issued and their nominal values. Nominal is nothing but your face value is shown in the notes to accounts on share capital. Sir, basically, sir, what are the four things we have taken? Shares issued against promoters, shares on a private placement, shares on the subscription. Basically, shares issued consideration other than cash. Listen that, sir. So that all these items will be shown under issued capital. Most important, guys, it should be keep in mind that issued capital can be equal to or less than authorized capital. Issued capital can be less than or equal to authorized capital. Issued capital can be less than or equal to authorized capital. Also, it can be equal to or more than subscribed capital. Next condition is it can be issued capital can be greater than or equal to subscribed capital. Issued capital can be greater than or equal to be subscribed capital. Okay. Next, like an authorized capital, the amount of issued capital is shown in notes to accounts on share capital as information only. Sir, next important clarity, sir. Authorized capital, issued capital, both are presenting. We are only informing the shareholder. This is authorized capital. This is a issued capital. We will take. It will not add it to the liability. We will never add it to the liability. What is a definition, sir? Definition has been said by the Companies Act in Section 2, Clause 50, sir. Section 2, Clause 50. Section 2, Clause 50. The issued capital definition is given. Issued capital means such capital as the company issues from time to time for subscription. From time to time, whenever it needs. Whenever it is in good mood. Whenever it is in a bad position. They will come to public, give me your money. I want your money to invest in my business. I will give you a return of 10%. I will give you this much of dividend. Like some things will happen. They will issue a debentures. Whenever they will issue a capital, that is nothing but equity shares. Whenever issued capital issues, that is the issued capital will shares will issues from time to time. If they need, there is some time gap as per SEBI. Okay, that time gap should be there. You cannot in 1 month you can issue one share, then 100 shares on next month, 100 shares on next month. This is not possible. Okay, there should be some time lag between the IPOs and FPOs. Okay, now I will give you an in-depth explanation in the only one full handwritten note as an entire structure of share capital at this end of this session. What is subscribed capital, sir? Subscribed capital is that part of issued capital which has been subscribed. Basically, I will quickly go through it. Amount received by the company, whether in cash or kind, that is most important. Whether in cash in kind as a subscribed capital is shown as a share capital on the face of the balance sheet. On the face of the balance sheet, whatever is subscribed, we will only take into the balance sheet. Based on that, we will take. Okay. Definition of subscribed capital, sir. What is a definition, sir? Listen, subscribed capital means such part of capital which is for time being. Time being is a keyword. Time being subscribed by the members of the company. Members can also be called as shareholders. Members can also be called as shareholders. But I can tell you something that members can also be treated them as promoters. Promoters at the time of inception means starting. It is not inspection, it is inception. Inception means starting. Sir, what is the difference of subscribed capital, sir? Wait, sir. Subscribed capital is classified into two. Subscribed capital two. One is subscribed and fully paid up. Subscribed but not fully paid up. Subscribed, fully paid up. Subscribed but not fully paid up. Listen, sir. From now onwards, example is going to come. You're going to enjoy like anything. Subscribed and fully paid up. Subscribed and fully paid up. Listen. Subscribed and fully paid up. In this, shares are shown as subscribed and fully paid up when both the following conditions are met. Both should be satisfied. Condition number 1 and condition number 2, both should be satisfied. What is condition number 1? What is condition number 1? That condition number 1 is company has called the full nominal value of the share and company has received the amount called up. For example, company is calling one share 10 rupee. Shareholder come. I want one share. If you are holding 10 share, I need 10 rupee from you. The company has called the full nominal value, full nominal value. Whatever the face value here, I am assuming face value here should be 10 rupee. If the face value should be 100, that 100 should be called up. And company has received the amount of called up. Whatever you are asking, shareholder is also giving. Whatever you are asking, shareholder is also giving. So both the conditions should be met. If both the conditions should be met, it is a subscribed and fully paid up. Listen, my example, Paul Limited, my favorite Paul Limited company will come. Paul Limited issued 1 lakh equity shares of rupees 10 each and has called full face value of rupees 10 to be paid and is also received. Condition number 1, called full nominal value to be paid and has also received full. C1 satisfied, C2 satisfied. So both the conditions are satisfied. Then only it is subscribed and fully paid up. Fully paid up. Since the company has called the full nominal value of the shares and has also received it, hence it will be shown as fully paid up, basically. How I can show, sir? That's my next question. Listen. Right. In notes to accounts, under share capital, you should write the term subscribed capital. Authorized you should write, issued you should write. That is an information. Subscribed capital you should write. You should use the term subscribed and fully paid up. 1 lakh equity shares of rupees 10 each at rupees 10 lakh. Subscribed and fully paid up 1 lakh equity shares of rupees 10 each for that amount. This is the amount column. That amount column you should write 10 lakh. Next, subscribed and full but not fully paid up. Subscribed but not fully paid up. Listen, shares are shown as subscribed and not fully paid up under 2 situations. First situation, S1. S1 means situation number 1. What is situation number 1? When the company has called the full nominal value of the share but has not received that amount called up. For example, I am calling 10 rupee, but I am receiving only 8 rupee. That is my situation number 1. Read it, guys. When a company has called the full nominal value but has not received that amount, the shares on which amount is not received, called as classified or shown as subscribed but not fully paid up. For example, the example is important. Fifth Avenue Limited issued. I don't like the name Fifth Avenue Limited. We will change it to Bun Limited. It's a bun selling company. 1 lakh equity shares of rupees 10 each. Today, bun and all is become famous. No bun butter jam. So we will keep it like a funny thing. We will keep it. Bun Limited issued 1 lakh equity shares of rupees 10 each. It called up the full value. He's asking, company is asking, give me a shareholder, give me 10 rupee. But received the amount called the final value of 3. Except is the keyword which I want to mention. Except, I'm issuing 1 lakh equity shares. The called up value I'm asking is 10 rupee. So 1 lakh equity share I am issuing. That is issuing capital, issued capital. On that, I am asking 10 rupee per share. That is my full face value. That is my full nominal value. That is my full nominal value. And received. Except means I'm asking 1 lakh equity shares holding by maybe 10 people, maybe by 1 people, maybe by 50 people, maybe by 100 people, maybe by 1000 people. I don't know about the shareholders numbers. Divided into 2. 10,000 not come. 90,000 come. Yes. So it is 10. So total 9 lakh I received. 10,000 into 10 rupee I not received. On that it so 3 rupee only is not given. So total 30,000 is there. So what I should do? Listen. How I need to express? Listen. First, write a subscribe capital. Then subscribed and fully paid up. 90,000 paid up fully. Yes. Equity shares 10 each at rupees 9 lakh. You should write like this in your examination in your notes. Stock accounts number 1. Subscribed but not fully paid up. 10,000 equity shares. Equity shares of rupees 10 each. 1 lakh you should write first. First you should disclose the entire full value. On that, subtract less. Calls in arrears. CIA. Calls in arrears. What yet to be received? What yet to be received? 3. What yet to be received? 3 rupee. So 10,000 into 3 rupee will become 30,000. Calls in arrear is 3 rupee. 3 rupee. 3 rupee. 10,000 shares is 30,000. Sir, calls in arrears is an asset or liability? It is an asset. Sir, why we are showing it on the liability side? Sir, calls in arrears is an asset. Why we are showing it on the credit side? Why we are subtracting from the subscribed capital? Calls in arrears is a liability account showing liability account showing debit balance. Liability account showing debit balance, or alternatively to be understood as it is an asset account. But in schedule 3, as per substance over form, you should check the reality. In reality, I need to receive 1 lakh. But what I am actually receiving in reality, what should have been received? 1 lakh in reality. But what I am receiving right now, only 70,000, not 30,000 not received. So deduct it and show it. So what you should do, on this 9 lakh will be there. Okay. So this if you subtract, you will get 70,000. If you add, you will get 9,70,000. This 9,70,000 to be shown in the balance sheet. Important. To be shown in the balance sheet. Okay. See what is a perspective I'm thinking. Calls in arrears account is yet to be received. Yes, yet to be received. It is asset account. Yes, it is a asset account. Anything which is receivable comes under asset. Okay, then it means should be shown under the asset heading, right? But why we are showing on the equities and liabilities as a separate form, as a subtract from the calls in arrears? What yet to be received is 30,000. Showing on the asset side and subtracting on the liability side is more or less equal. So where the calls in arrears is come, why I need to receive? Because I need to receive because I'm issuing a share. I need to receive it. If I receive it, I will be liable. So it is a liability account showing a debit balance. So it is an asset account. You can also treat them as asset account. No issue. Now my second thing. When the company has not called the fully nominal value itself, company is not even asking that particular amount itself, then what will happen? Next question. Listen this next clarity. Where a company has allowed the full nominal value of the share, subscribed and fully but not fully paid up, fine. But for example, Noida Infrastructure Limited has issued 1,50,000 equity shares of rupees 10 each, on which 8 are called, on which 8 rupees 8 only they are calling. They itself is saying, I don't want 2 rupees right now. You will only pay me rupees 8. This is under everything is on theoretical aspect. Today, in practical perspective, everything is changed to demat. Whenever they comes to IPO, they will only get you a entire full value. They will never ask you, come, Sudarshan, come. You will pay me this 10 rupees. No, now you will give me 5 rupees. I will allot a share. Then I will give me 3 rupees. Whenever I need, I will come and ask you. This will never happen in current scenario. Theoretically, it will happen. For some unlisted companies, it will happen. Okay. These shares will be classified or shown under subscribed but not fully paid up. Listen, how you need to show. Listen. Under a same heading, subscribe capital, subscribe but not fully paid up, you should write like this. 10 rupee each, comma, rupees 8 called up. 10 rupee each, comma, rupees 8 rupees called up. This is an important thing which you need to remember. The presentation is only important in Schedule 3. Rather than calculation is so simple. Presentations matters. Where to show, when to show, how to show, at what amount to show. Okay. 1,50,000 equity shares at rupees 10 each, 8 rupees called up. Why 8 rupees only? 8 rupees called up. So 1,50,000 into 8 will become, well, here I am disclosing as an information, this share value is a face value of rupees 10. That's what I'm disclosing. Sir, next question, sir. A situation may arise that company has not called fully the face value of the nominal share. Fine. Also, it is not received the called up amount on the share. Next situation arise. 8 rupee I am asking. Shareholder is also subscribed but not fully paid up. You should not, the most important point here is, you should not shown under subscribed and fully paid up heading. You should show, even though it is called up, it is a called up value. It is not even paid right now. It is only a called up value. I am asking you as a company, I am asking you the shareholder, I need 8 rupee. So that I am creating on the liability side. Subscribed but not fully paid up. That is rupees 8. This is an important point. Not receive the called up amount on the share. For example, it means part of the shares is calls in arrears. Part of the shares is calls in arrears. Continuing the above example, whatever the example will say, let us assume Paul Limited will have 1,50,000 equity shares. Shareholders holding, I don't know the shareholder. It can be 5, it can be 1, it can be 3, it can be 15, it can be 20, anything. 5,000 equity shares have not paid the first call. Fine. They said first call 2 rupees, they never paid. How much has been called up? 8 rupees has been called up. How much is the first call? 2 rupees the first call. 1,45,000 equity shares worth of holding the shareholders has paid. 5,000 as equity shares is not paid. So this situation, anything should come under the heading subscribe capital. Anything, each and anything should come under subscribe capital heading. Listen. Anything which is partially. For FP, what is fully paid up, subscribed and fully paid up, two conditions should be satisfied. 10 rupee I should ask. They should also give me 10 rupee. If that only happens, it will show on the subscribed capital. Under the heading subscribed but subscribed and fully paid up. If in any other situation, it will show under subscribed but not fully paid up. So what I should do? 1,50,000, 8 rupees called up. That itself will become 12,000. 12 lakh less. How many people are not giving? 5,000 holding 2 rupees not giving 10. So in brackets I should show. So 11,90,000 I will record. 11,90,000. Listen, important. In case company having reserve capital, the shares are shown as subscribed but not fully paid up because full nominal value has not been called up by the company. It has been not called up by the company. Next, important. Different class of share capital, where the company has a different class of share capital. Details of each class of share capital is shown separately. For example, if a company has issued both equity and preference shares, authorized or nominal, issued capital, subscribed capital are shown from both equity and preference shares. Both equity and preference shares separately has been illustrated below. Are you ready? Shall I go with an example? Listen, guys. Now we will go with the master example to understand this. Whatever I am taking, it's completely assumed data. Okay, it's completely assumed data. First, I should write notes to accounts. In notes to accounts, I should open note 1. What is note 1? Shareholders fund, share capital, share capital. It is not shareholders fund. Once done. Okay, once it is done, I will write down. Listen. Particulars. Rupees. Again rupees. This is the important column. This is a dummy column. This is a dummy account. Okay, this is a main account. For the year ended 31st March, assume 2024. Now, what you should do? Listen, guys. What you should do? First, you should write share capital. Under a share capital, you should write authorized capital. Under an authorized capital, we should write. Under this, we will write. Assume there is a 1 lakh equity shares. 1 lakh equity shares of rupees 10 each. Directly show 10 lakh rupee. Then 10,000 preference shares of rupees dash each. Many will ask. If the question is silent, you should assume preference shares under Companies Act is 100. Okay, even you can assume 10, but you can give in the working notes, given in the notes. Okay, even you can assume 10 or even you can assume 100. Basically, they will give it to you. Okay. Then 10,000 into 100 will become 10 lakh. I will add this and I will only present 20 lakh. I will never take this to balance sheet. Next one. Issued capital. What is the issued capital? Issued capital is nothing but assume I am having a total capital of equity capital of 1 lakh rupees. On that is 1 lakh equity shares I am having. On that 1 lakh equity shares, I am going to issue. I am going to issue only. I kept 10,000 as my reserve. I will only going to issue right now 90,000. 90,000 equity shares. I'm writing for the very first time in depth briefly to make you understand. Or else in most of the classes, I will write years of shares. Okay, even I can write it. I have a privilege to write it, but I will never do for this particular class because you are so intelligent to understand this subject of accounting. So I want more to do for the students, those who have keen interest to learn the accounting in a different perspective. So 90,000 equity shares of rupees 100 each will give you 9 lakh rupees. Will be on the second column alone. Second column alone. Okay. Next on that, that 9,000, comma, or first of all, I will write down 10% preference shares of rupees 10 each. Sorry, rupees 100 each, right? Rupees 100 each. It will give me 9 lakh. The next thing is 18 lakh. Sir, listen, sir. Important point, sir. For our discussion, sir. Give an attention, sir. Keep your spinal cord very straight, sir. And listen, sir. 10,000, sir. Preference share, sir. 100 each, sir. Why you never put 10% in the authorized capital share? At the time of memorandum itself, I will never take that percentage. What is this percentage rate, sir? First explain that. That percentage is a rate of dividend for the preference shareholder. Rate of preference shares, rate of dividend to be declared on that particular preference shares. Dividend should be declared on the face value or on the market value. Should be declared on the face value, not on the market value. Dividend should be declared on the face value, not on the market value. Dividend should be declared on the capital, not on the market value of the capital. It should be on the face value of the capital. It should be on the nominal value of the capital. Okay, so 9,000, 10% should be added on issued capital. At the time of issuing only, I can able to know I am having total 10,000 shares preference shares on that 9,000 preference shares. I am going to issue at 10% rate of dividend. That 1,000 preference shares, I am going to send it to my very known person. For them, I'm going to pay a high rate of dividend that is 12%. Then at the time of issuing that 1,000, I will write 1,000, 12% preference shares of rupees 100 each. Same 1 lakh only I will write it in issued capital at the time of issuing that 1,000. Okay, the rate of dividend will be fixed at the time of issuing only. It will not be fixed at the time of authorization. Clarity. Fine. Now, next heading. Next, subscribed capital. Subscribed capital. What happened to subscribed capital? Next, under subscribed capital divided into two parts, subscribed and fully paid up, subscribed and not fully paid up. Assume how many equity shares I am asking? 90,000 equity shares I am issuing. And also I myself is asking, under this I will write a subhead. Under this I will write a subhead, subscribed and fully paid. Subscribed and fully paid up. Subscribed and fully paid up. Assuming on 90,000, I am only subscribing 90,000 equity shares as only subscribed. So 90,000 equity shares, 90,000 equity shares of rupees 10 each, because I am also calling 10 rupee fully. So 8 rupees is a subscribed capital. The paying or not paying is not matter. That point I will never come. Just listen. 80,000 equity shares of rupees 10 each, 8 lakh has been paid. 8 lakh has been fully paid up. Okay, the subscribed and fully paid up. Fine. Next, subscribed but not fully paid up. But not fully paid up. Listen, assume how much is left? 10,000 equity shares has been left. From 90,000, 80,000 gone, 10,000 equity shares of rupees 10 each is there. This dummy column I will write 1 lakh. In dummy column I will write 1 lakh because that is a face value. On that, less, if any CAA, what is CAA? If any calls in arrears is there. If any calls in arrears is there, all are assumed figures. Listen, if there is any calls in arrears is there, assume for 10,000 shares, there is a 3 rupee. In the previous example, we'll take 3, no? That 3 rupee is there. So rupees 3 will be there. So I will deduct 30,000. I will deduct 30,000 and I will show 70,000 in the second column. That is on the original account of the share capital. Fine. Then don't stick with equity shares. There may be a situation. Preference shares may not be fully paid up. Preference shares may be paid up. That will be a partly. In our redemption of preference shares, we have discussed this. Okay. At the time, there is a partly paid preference shares. Partly paid preference shares should be converted into fully paid preference shares at the time of redemption. This everything we have learned it there. Go and refer that. Okay. 9,000, 9% preference shares of rupees 100 each. All this information are assumed. Okay. In examination, they will give it everything. Okay. 100%, 100 each, rupees 90 called up. I myself will only calling 90 rupees right now. So you should only multiply 9,000 with 90. You should not multiply 9,000 with 100 because calling itself is 90. So 8,10,000. Are you able to understood? 8,10,000. Assume in that also there can be a situation arise. Calls in arrears may become. There may be some persons, some good persons, they will never pay you. Okay, they will never, some very good persons are there in a society, like a shares, they will never pay you, like a preference shareholders. Okay, assume for 500 preference shares into rupees, they are not paying 10 rupee. That my final call value 10 rupee, they are not paying. So 500 into or 20 rupee, they are not paying. Assume 20 rupee, they are not paying. I am asking 90. They itself is not paying 20. So 5,000 preference shares only not paying. So 5,000 into 20 is how much? 5,000 into 20 is how much? 10,000. So if I deduct this, then I will show 8 lakh. Then I will show 8 lakh. Then final value, 8 lakh. This issued capital and whatever I write on authorized capital and issued capital is like an information only. It's like an information only. Subscribed capital, what is the value? 8 plus 8, 16, 16 plus 70, 16,70,000. 16,70,000 is a total. This to be shown against share capital in balance sheet. This to be shown against the share capital in the balance sheet. What is called up, what is paid up, we will see it in the next part of the session. What is called up and what is paid up, we will see it in the next part of the session with the new video. With this, we are wrapping up our today's session. With the signing off of Sudarshan. Have a great day, guys.